up in South Africa, looking at the third quarter GDP numbers out of China, and we've also had the initial jobless claims. A lot of talk about the Fed's quantitative easing. JSE all-share above 30,000 points, Nick. So, I mean, at the end of the day, some people are saying that we need to start taking money off the table. Do you agree with that?
Look, it's a fair point. We're back to where we were not that long ago. Granted, we were at 33, but look, 30,400, 30,500. The last couple of days we've been here before. It is a bit of a resistance. So, from a technical perspective, in the short term, we are a little bit stretched at these levels. It's not won't be surprising if we see a pullback. However, there is quite a lot of momentum in this market, and regardless of negative news or positive news, this market just keeps on going up and away.
And the Dow Jones 11,200 points
I would be hesitant to sell aggressively into this market. I'd certainly be taking portions of money off the table. Specifically, if I'm in massive profit, I would think that would be the right thing to do. China's GDP of 9.6% is very, very good and very massive. I think the more important GDP is what the third quarter GDP will be like in America. I think that's the big figure that everybody will be looking at, going forward, and that will really move the market in a sentiment kind of way. Are we going to see further gains if the figure is better than expected, or will we see quite a decent sell-off from granted very, very high levels if the figure is negative? So that's the figure I'm looking at. That's still a little while away, but that's what I'm keeping my finger on at the moment.
Well, it's interesting. We've got the JSE all-share currently sitting at 30,439 points. We've got the Dow Jones at 11,200. And I remember at the beginning of the year, most investors and economists that I was chatting to said, you've got to differentiate between the real economy and what's happening on the equity markets. And this comes at a time where we're waiting for more quantitative easing. So more money is going to be flowing through into the market. So in other words, the equity front, we could see more gains coming through as well.
True, there's a massive disconnect between the two. That's what a lot of people don't understand, is that what's happening now is a lot of artificiality, if that's a real word, I don't know. But the point is that there's a lot happening behind the scenes that certainly has an impact on markets that are completely separate from the fundamentals, the actual real economy out there at the moment. So again, I would still be hesitant. There's massively reduced interest rates across the world. Inflation doesn't seem to be a problem just yet. There's a lot of money floating around there, a lot of liquidity, and we are seeing a continuous inflow of money, and that has to go somewhere. You have to find a home. There's only so many government bonds you can buy. There's only so many bank accounts you can put it into. But wait, there's the stock market. That's another option, and that's where the money's been flowing into as well. But all of a sudden, the GDP data looks terrible. We could see the markets pull back, but in the short term and in the longer term, everyone's talking about, well, now, the growth in America is not looking so good. The government needs to do something about it. There's going to be a new stimulus package, more quantitative easing, more money flowing into, the stock exchange. We could actually ironically see the markets go up even on negative news. So it's a very difficult place to be in at the moment. And, you should have made some profit by now this year. That's higher than the average inflation rate. If you are worried about what the future is going to hold, because no one's going to be able to tell you exactly what's going to happen, might not be a bad idea to move a little bit of money off the table, put that into a government bond, or put it into the money market under a ridiculously low interest rate of 5 or 6%, but at least it's guaranteed, for the short term. And then take a step back and have a look at things.
Let's take a look at Anglo American posting some output numbers. Third quarter iron ore output flat. 9% fall in copper production. And these stocks up quite significantly today.
I think this is the sector that could still really push us up. So if these markets go to 33,000 points, the resource is going to take us there. And the main reason for that is that we need to look at the copper price, $8,400 a ton. I mean,
so production is down and supply and demand is
demand's still there. Look,
so
I mean, production's down for various reasons. I mean, you could have a strike action, you could have a derailment at one of Transnet's railway lines. There are many reasons for that, but the point is the product's in huge demand. The prices that they're getting for it are very good. Naturally, the rand conversion is not as good at the moment, but I mean, at $8,400 a ton for copper, that's way through the roof. Iron ore is also looking incredibly good. I think that's at $130 a ton. I mean, a ton at the moment. So these companies are making massive profits currently. The South African mining companies have certainly been undervalued in the short term. I think from an international perspective, they've been sidelined due to the political rumblings at the moment with regards to nationalization. Sorry, I lost the word there. Nationalization, as well as red tape when it comes to mining rights, so on and so forth. Then we have wage disputes in South Africa and high electricity prices. But eventually, that demand for those resources is going to come through. It's going to come through in the profits, and investors overseas will realize that companies like Anglo American and Sasol and Kumba are showing some very, very interesting valuations at the moment, and we can see that they've really, really spiked. I mean, Kumba all-time high, Exara back up to 133, Billiton looking good above 240, that's technically looking very, very nice, and Anglo American closing above 320, I see, so that's also technically very, very
321.98,
exactly.
so that's up almost 3%. Kumba Iron Ore, though, saw a 5% decrease in total production, and pretty much,
correct.
We know,
not their fault at all. When you look at that, they actually explain that, number one, there was a couple of derailments, so that caused a delay in the sending of those goods down to the coast, as well as a 10-day closed period where Transnet had to repair some of the railway lines.
Top of the top 40, MTN Group, 125.
Yeah, that was down yesterday.
40, up 3.2%.
No specific reason. That was down from 130, hit a brick wall, technical resistance level, came all the way back down to 121 or 122 over a 2-day period.
Mid-year, I remember
it was oversold a little bit.
At about 100 Rand.
Yeah, 100 Rand.
So things have changed quite dramatically.
Definitely. Well, that will be interesting. 100 Rand is very important because anything below 100 Rand, this BE deal that they just put on the table becomes worthless. So that's very, very important figure to watch. But looking forward, I think 115 Rand becomes a new buy entry. But I think it was just oversold a little bit too heavily in the last 2 days, and we've seen quite positive markets. So I think a few punters coming in, they're buying the stock in the early 120s, probably happy to take profit at the late 120s, early 130s.
We've also been, perhaps ignoring the oil price because that's at around $84 a barrel.
Climbing a bit.
We've got Sasol sitting at 320 Rand a share, and that was up 1%.
So that's finally moved. I mean, it's been 2 years now. We've been sitting there trading between 280 and 300, 280 and 300. All of a sudden, it spiked up to, I think, 335, 340, and then they declared, it went ex-dividend, the share price pulled back again. So, sure, if you've bought Sasol the last 2 months, you've done incredibly well. You've got a 7 Rand 70 dividend, and the share price growth is looking very, very good. So again, from a technical perspective, from traders' perspective, we've broken above this massive resistance line that we've had for the last 2 years. So the stock at the moment is re-rating, and something we've been talking about for quite some time is watch Sasol. It might just surprise you. They've done a lot within that business to get costs under control, and I think looking forward, it's certainly something I would look at. Price is important, and it has run very hard, but if I see anything close to 300, I'll be happy to pick up that stock.